Hey everyone, me Kevin here. December 18th will be the last day that you can buy or sell Tesla before Tesla gets included into the S&P 500, which inclusion day is December 21st. So mark your calendar for December 21st. That is when the S&P 500 has decided in one big lump sum to include Tesla into the S&P 500. This is going to have some pretty big implications for what happens to Tesla leading up to December 21st and after December 21st. And that's what we're going to talk about in this video. Just a quick reminder that today is actually Cyber Monday. So if you're still thinking about checking out the amazing programs linked down below on real estate investing, property management and rental renovations, the money and psychology of stocks program, make sure to check those out down below. There's even a course on making YouTube videos so you could share your opinions on stocks or Tesla or whatever you have opinions on. Get your perspective out there. Use that coupon code down below, and you can always email me for a bundle up coupon at kevin@meetkevin.com. All right, so here's what's going on. S&P 500 just announced that, well, a couple weeks ago, they announced that Tesla will be joining the S&P 500. And initially they said, hey, we're considering having two dates. We'll include Tesla a little bit on December 14th, which is a Monday, and a little bit more 7 days later on December 21st. Well, they changed their mind, and they're just going to include Tesla all in one batch. Because of this announcement, Webull shows in after hours trading that Tesla is up 4.42%. And ever since, the S&P 500 announced Tesla's inclusion, Tesla has basically just gone straight up to the moon. As we can see, this line is going up, which has been very profitable for people who own Tesla shares. The other thing to keep in mind is that right now, Tesla trades at about a volume, which we could see right here where my mouse is. It's kind of small, but I'll just read it off to you. At a volume of around 37 million shares in one day on this particular day, yesterday. So 37 million shares of Tesla traded hands on the 27th. On this day, we had 60 million. Over here, we had 48 million, 53 million, 49 million, 32 million, and so on and so forth. So you kind of see the balance of where Tesla's volume is. Tesla's volume was a lot lower before that. Look at this. This was 20 million shares, 19 million, 19 million, 17 million, 30 million. So much, much, much more volume after Tesla was announced to be joining the S&P 500. This is because of index front running. As soon as the S&P 500 announced that they are going to include Tesla, you have buying volumes jump dramatically because people are now buying Tesla in the anticipation that index funds are going to have to buy somewhere around 120 million shares of Tesla in one day. And traders think that is going to be the perfect opportunity to buy shares now and sell it to these index funds that don't care about price in the future. All right, this is interesting. We're going to unpackage this. Why would I say that index funds do not care about the price that they're buying the stock for? Well, it's because they don't. They do not care at all about price. In fact, take a look at this. This is Vanguard. This is Vanguard's 500 index fund investor shares, also known as their ticker symbol here, VFINX. This is their ETF, or exchange traded fund, that basically just tracks what the S&P 500 does. This, I believe, charges you a fee of about 0.14% of your money invested. Yep, here it is, 0.14%. And for that fee, Vanguard will make it so that if you put money into this fund, you will always get as close to the S&P 500 as Vanguard can possibly get you to. And you could see that this is the chart or the performance chart of what their fund has done. And we can actually overlay the S&P 500 on top of this. Perfect. And we can see that the lines almost perfectly match up with a slight variation. You can see on this particular day, it looks like we were about $200 apart from their fund versus the actual S&P 500. The big theme here, though, is when one goes up, the other goes up. When one goes down, the other goes down. Here's our V, so to speak. V-shaped recovery in the stock market. And so you can see they kind of follow the same line. See, if I add something that's not the S&P 500, like if I add the Dow, I would expect a different line. There you go. The Dow kind of moved similarly. That's actually not that bad. It's very, very similar to the S&P 500. Let's try another one. Let's try the NASDAQ. There you go. So you get some diversion, right? But again, if we just compare to the S&P 500, you could see this tries to perfectly match this. All right, so what does that mean? Well, it means that on December 21st, even though these index funds could probably buy some Tesla shares before or after, to get some maybe price advantage because they know they're going to be including it, that would mess up their chart. Then their chart wouldn't align as much to the S&P 500. So basically, this announcement screams to the world, we're just going to buy 120 million shares of Tesla no matter what the price is. And so, this is why all of a sudden you get like every trader and their mom going, we gotta buy Tesla stock so we can sell it to the index funds on December 21st who don't give a flying crap at all about what the price is because they're gonna buy it from me no matter what the price is. And then you get the traders who are like, well, I'm gonna buy Tesla stock and then I'm gonna sell it to the other traders and I'm gonna day trade off the other day traders. And basically, there's this big like zero-sum game that goes around of traders trying to steal profits from each other leading up and trying to outsmart the next guy leading up to December 21st. But the problem is when everybody and their mom gets into trading Tesla shares and everybody's trying to outsmart the other guy, it is entirely possible that what looks like an easy money-making opportunity ends up turning into a situation where a ton of people end up losing money because they bought too many Tesla shares at too high of a price. They flood the market with Tesla shares, trying to basically give the index funds all of the shares that the index funds might desire. And all of a sudden, you see Tesla stock price fall because you had way too much buying happening before. I mean, just look at the delta that's happening here, right? The change in volume. Remember on these days, we had before the inclusion, 20 million shares of volume, 20 to like 35. We have consistently been seeing volume exceed that by 2 or 3x. So for example, on this date, let's call 25 million our average volume in just the last few weeks. Well, here we had an extra 35 million shares that traded that day. Here we had an extra, 50 million shares. Now that doesn't mean that all of those orders are people just buying, right? A buy and sell would be 2 orders or 2 shares of volume, right? But there are a lot of people who are collecting extra shares. And so we could guess that even if for every day leading up to the Tesla S&P 500 inclusion, there could potentially be 10 million shares that people are buying and just holding on to, ready to sell it to the index funds. In other words, a lot of the benefit of this S&P 500 inclusion coming up, where people are like, it's gonna send Tesla stock price up, it's gonna be awesome, might already be priced in. Now, there are rampant speculative beliefs about what Tesla is going to do between now and December 21st, which is in like 3 weeks from now. We got a lot of this craziness ahead of us. But a lot of people believe Tesla's just basically gonna either trade sideways or go straight up until inclusion day. And inclusion day, that is what I want to talk about because that's where my strategy comes in. And so this gets to my plan for Tesla. Even though I have traded stocks profitably before, I will not be trading with Tesla. I am very excited for inclusion day though, because I think I'm going to have an opportunity to finally go shopping for Tesla again at a cheaper price. My current strategy is this, and I've written it down so I can hold myself accountable. If Tesla stock falls 5%, because maybe there are too many traders flooding the market and Tesla falls afterwards, which is common. In fact, studies show that after a stock gets included into an index, any kind of benefit of actually being in the index tends to go away after 3 to 4 months, usually as the traders kind of move out and the buy and holders get back in, you get back to a normal sort of volume per day. But anyway, if the stock is down 5%, I'll add and I'll buy Tesla in small increments, nibbles I call them, like 3 to 4% of the cash I have available. If the stock falls below 525, I will probably buy a little bit more, maybe around 8 to 10% of cash. That's still a lot more than I'm used to paying for Tesla, but that's okay. I want to keep averaging into Tesla on reds. So if it falls below 525, I'll add 8 to 10% in cash. If the stock goes below 450 again, I will buy more heavily. This could literally be 20 to 30% of the cash I have available because that's where I've been used to buying Tesla. I've been used to buying Tesla around 380 to 410 in the last few weeks, and I'd like to revisit those numbers. And if Tesla falls under $400 a share again, which it last did somewhere around the middle of November, which I bought that day, I'm very grateful that I bought. If it falls under $400 again, I will go all in on Tesla. With all the cash that I have, I will even refinance my house and buy some more Tesla. So that's my strategy, and that's what's happening. Now, I often get asked, Kevin, why don't you buy some put options against Tesla? If you're thinking, hey, there's a good chance that traders have overbought Tesla shares, they're gonna dump these all onto the market to get out and trade out a Tesla, why not buy some put options? Well, it's because you've got tons of traders already trading the put options in anticipation of Tesla falling afterwards. Now, that doesn't mean you can't make a profit, but right now, I'm not interested in any kind of short-term capital gains or even short-term capital losses. I am solely interested in buying Tesla consistently over time on red days. So that's my personal POV. I love Tesla. I'm gonna keep making Tesla videos. So if you enjoy Tesla videos, definitely subscribe. Stay tuned to the channel. Consider sharing the videos if you like them. And folks, get those courses linked down below, and we'll see you next time.